How do new construction loans work? We've all seen HGTV. We'd all love to build our dream home. So, how do I get there? Typically, with a new construction loan, you're going to have different options. If you work with a larger builder, they might actually carry the financing for you, and you're not putting any different types of financing options together. You're just purchasing the home from them when it's completed. Typically, in that case, they'll require a larger deposit or earnest money up front before they build the home, though. If you are working with a smaller builder or just elect to do this option, you can carry the financing all the way through. At the beginning of the process, you'll find a lot and you'll decide on plans and specs. We would send an appraiser out to the property to say, yep, based off of this lot and off these plans and specs, this home will be worth this value when it's built and completed. So then we lend off of that appraised value or contract price that you've decided with the builder. Then we'll close typically a few weeks after that period is done. So you're not closing on a construction loan until all of your plans and specs are done. At that initial close, you can put a minimum of 10% down, but sometimes people will choose to put more down. And then throughout the construction loan, you're just making interest-only payments on the amount that's drawn. So the builder will typically take what's called draws throughout the process. Let's say the first draw is enough money to cover the lot and the initial lumber package. So then your payment might only be a few $100s on the first one. The next draw might cover the bricks and the woodwork inside and appliances. And then that draw would then go up in cost monthly because now the builder's drawn more. You do that all the way through the process until the builder has drawn all of the money, and then inevitably your home will be done at that point. That is when we convert your loan into whatever you choose. So we can do a 30-year fixed, an ARM loan, really whatever. It's totally up to you on what your family budgeting and plans are. In that, we can lock your loan at the end when the build is done, or we can lock it a year in advance if you know that that's the best option for you and your family, depending on the market. So as you can see, there's a lot of intricacies to new construction. So if it is something you're thinking about, you definitely want to plan ahead and have your head wrapped around, will we keep our house during the process while they're building the new house? Do we need to sell our house to get the cash out for the down payment on the new construction? Is there other options, and what does that look like?